Good morning, everyone. Good afternoon. Look at what I'm doing. PayPal, what a quarter. What a quarter. What a performance from the stock. I'm here when I'm actually here, I'm here in Los Angeles. This is the crypto arena stadium where the Lakers sometimes play some good basketball. But yeah, we have Sofi and PayPal. We have a mixed bag, I would say. Apologies for the quality of the stream, but it is what it is. It's also 5 a.m. here. Haven't slept that much, to be honest. But, I mean, when PayPal is up 14-15%, we don't need to sleep. We do not need to sleep. We go from PayPal to GainPal. Yes, this is going to be the new T-shirt. The new T-shirt. But I know I'm late. Well, late. PayPal's earnings call is starting in just a bit. So we're going to have a look at that. We have PayPal that's up significantly pre-market. Let's see if it holds. Okay, let's see if it holds. SoFi is up $1 at the time of making this video. Of course, after the earnings call, we'll talk a little bit more about that. I'll try and make some shorter videos sharing my thoughts on the quarter. But yeah, PayPal keeps performing. We of course have, this is also something that I found out a couple of minutes ago. We have a dividend. We have a dividend for everybody that wanted a dividend. Here you go. We have a dividend. We have a so-called OpenAI partnership. So yes, I am quite happy. I'm quite happy. So without further ado, let's actually have a listen to the earnings call, shall we? Camera is shaking. Yeah, maybe it's me being extremely excited, but yeah, let's fix that. Let's first share this. Let's see if the sound is actually working from this earnings call. Tell me if you can hear something.
Delivered this acceleration in our business while remixing inefficient spend into growth investments and returning capital to shareholders. And in total, we are on pace to deliver
If you
at
can
least 15%
hear, let me know. If
non-GAAP
not,
EPS growth this year.
I'll try and
all of this gives
something.
us confidence in the business's longer-term growth potential and ability to deliver high single-digit transaction margin dollar growth and non-GAAP EPS growth in the teens or better over the longer term. I'm also excited to announce that we are initiating a dividend. Our overall capital allocation priorities remain the same. We will continue investing first and foremost in our business's growth and transformation. We see this dividend as strengthening our overall capital return program working in conjunction with our ongoing share buybacks. Our free cash flow generation and balance sheet are strong and give us ample room to both deploy capital to drive growth and return capital in a disciplined way to shareholders. Put simply, this is the new PayPal, built for faster, more profitable growth. Our strong foundation, differentiated competitive advantages, and clear strategic direction position us to capture a massive and growing addressable market. With building execution momentum, we are driving innovation at a remarkable pace and scale. This makes us exceptionally well placed to win into the future. Turning to our third quarter performance, we delivered at or above the high end of our guidance range for transaction margin dollars and EPS. Importantly, our TM dollar growth continues to come from multiple areas of the business, including branded experiences, PSP, and Venmo. Non-GAAP earnings per share increased 12%, reflecting the flow-through of our transaction margin performance. The strength of our two-sided platform is evident in how customers are choosing to deepen their relationship with us. Monthly active accounts grew 2%. When you look at transactions per active account growing 5%, excluding PSP, you see the real story. Customers aren't just signing up, they're incorporating PayPal and Venmo into their daily lives. This engagement depth makes us a valuable partner to merchants and will drive sustainable, profitable growth. Now I'd like to discuss the progress we are making in our 4 strategic growth drivers: winning checkout, scaling Omni and growing Venmo, driving PSP profitability, and scaling our next-gen growth vectors. As you can see on slide 4, PayPal's TM dollar growth, excluding interest, has not only accelerated, it is coming from a far more balanced mix across our business. This is important to appreciate the strategy underpinning the value our teams are working to create. Compared to last year, Win Checkout's contribution increased, and PSP, Omni, and Venmo's contributions are a multiple of what they were in the past. This is a direct result of the work we have done to build more holistic, healthier merchant relationships, to scale our omnichannel presence, and to monetize Venmo. The innovation and momentum across the company are increasingly visible, as you have seen in our recent announcements, and as you will hear today. I plan to move quickly so that we can go deep in a few key areas like BNPL and Venmo, while also leaving ample time for Q&A. Let me start with branded experiences, which covers our first 2 growth drivers, online and in-store branded checkout. Our strategy is to meet our customers everywhere they shop, whether online, in-store, or agentic. We are focused on delivering the best checkout experience so consumers can pay how, where, and when they want. It means they can pay online with PayPal, Buy Now, Pay Later, Venmo, crypto, or soon a partner wallet through PayPal World. It means they can pay in-store with a PayPal or Venmo debit card, BNPL, or Tap to Pay. And it means building for a future where consumers can pay through AI agents powered by Google, OpenAI, Perplexity, and others. Last September, we launched PayPal Everywhere in the US to move beyond our legacy in online branded checkout into an omnichannel world. A year in, and the results show our strategy is working. Branded experiences TPV grew 8% on a currency-neutral basis in the quarter. This includes PayPal, Buy Now, Pay Later, Venmo, and our debit card programs, and is the single most important metric to track the progress on transformation from an online payments company to a commerce company. We need to be available everywhere a consumer wants to make a purchase. But this is about more than being present across channels. It's fundamentally expanding what PayPal means to our customers and the total spending we can capture. Historically, PayPal was synonymous with online retail payments. Today, we're evolving the way consumers pay for all of their commerce needs, moving beyond retail into services, subscriptions, bills, everyday expenses, and more. We're now playing for a much bigger addressable market. Our confidence in the financial impact of this strategy comes from the flywheel effects we see across our ecosystem. When customers start using PayPal or Venmo offline with our debit card, their online activity increases as well. ARPA goes up, profitability improves. In Q3, our PayPal debit card actives transacted nearly 6 times more, and generated nearly 3 times the ARPA of checkout-only accounts. We see a similar pattern with BNPL. Its use drives an uplift in overall activity and engagement. The data clearly validates our strategy and gives us confidence to increase our growth investments. Most of our product initiatives, plus our marketing investments over the past year, have started in the U.S. It's worth examining our U.S. proof points as they demonstrate the potential for our business as adoption scales internationally. For example, in the third quarter, we reached 10% branded experiences volume growth in the U.S., more than double our growth the same quarter a year ago. That acceleration comes from 2 things: growing omnichannel adoption and sustained improvement in the U.S. online branded checkout trends, supported by our improved experiences. We have the right set of drivers and initiatives in place. Now our focus is on adoption and investing to amplify our impact. As we move into 2026, we will be leaning more into these efforts and expanding across key international markets. Let me address online branded checkout in more detail. TPV grew 5% in the third quarter on a currency-neutral basis. That's solid growth, especially with the choppy global macro trends we continued to see this quarter. Given the competitive intensity online, we know more work is needed to close the gap between our performance and overall e-commerce growth. Our strategy moving into next year centers on 3 priorities: continuing to scale our redesigned checkout experiences, improving how we are prioritized across merchants, and importantly, driving biometric adoption. We are also leaning into new verticals and geographies that expand our addressable market and avenues for growth. All of this will be complemented by a consumer value prop with a highly competitive rewards program aimed at increasing frequency and selection rate. We also have a powerful growth lever with Buy Now, Pay Later and Venmo, which I'll discuss further shortly. This year, we've made significant progress deploying our redesigned paysheet experience, which now covers close to 25% of our global checkout transactions. We're moving quickly, but untangling a decade or more of legacy integrations is complex and taking more time than planned. In the cohorts where we are now optimized in the U.S., we continue to see close to 1-point conversion improvement. This gives us confidence it's a when, not if, we see more benefit from this modernization. At the same time, it's critical that we keep improving PayPal's prioritization across merchants and scaling biometric login, both of which have been proven to increase conversion. On the prioritization side, we are focused on scaling upstream messaging on product pages, driving adoption of our payment-ready API that allows merchants to target high-converting PayPal users when they land on their site, and improving PayPal's placement at checkout. Improved prioritization and presentment are powerful. In testing, when our Buy Now, Pay Later options are presented upstream on a product page, we see a nearly 10% lift in branded checkout volume on average. That improvement drives incremental sales for our merchants and customer loyalty with repeat use for PayPal. Within biometrics, we are focused on scaling biometric login, including passkeys and driving mobile app adoption, which enables seamless authentication during checkout. In ongoing testing to date, these authentication
Thank you very
efforts,
much.
when paired with the redesigned paysheet we've been scaling, have shown improved conversion between 2 to 5 percentage points. Consumers benefit from a mobile checkout experience that is second to none, while merchants see a higher customer satisfaction and sales. It's a win for both sides of our network. The bottom line, the initial results we have seen to date in the U.S. make us confident we're on the right path and have the right initiatives in place, both to drive acceleration and increase growth investments as we move through next year. Now that I've covered some of the foundational work underway, let me dive deeper on 2 important growth levers that I mentioned, BNPL and Venmo. The shift towards Buy Now, Pay Later is a fundamental change in how consumers want to pay, and we are extremely well positioned to capture this shift. In the markets where we offer BNPL, our solutions are available nearly everywhere PayPal is accepted. It's a reach and scale that's hard to replicate. This quarter, BNPL volume continued to grow more than 20%, with particular strength in the U.S. This puts us on track to process close to $40 billion in BNPL TPV in 2025. Monthly active accounts climbed 21%, and our Net Promoter Score globally is 80. People love this product. We have everything we need to win this market. We are investing to transform our BNPL business from a payment option that consumers discover in the PayPal wallet after they've made a purchase decision into a customer acquisition channel. This means moving to the beginning of the shopping journey through marketing and upstream presentment so that consumers know they can increase their purchasing power with BNPL. This focus and investment will expand our right to win in BNPL and further accelerate growth. We are also expanding BNPL to new geographies and introducing new product offerings, both online and in-store. We have successfully expanded BNPL into Canada and extended payment terms in Italy and Spain to up to 24 installments. After proving the model in Germany, we brought BNPL in-store to the US through the PayPal mobile app, seamlessly connecting online and offline shopping. We are building the future of flexible payments, and we're doing it at scale. Moving to our Venmo business. Venmo isn't just another payment app. It's the money movement platform of choice for the next generation. One of the things that continues to set Venmo apart is its user base. Young, affluent, digitally native consumers who are shaping the future of commerce. With nearly 100 million total active accounts growing mid-single digits, Venmo has tremendous scale in this attractive demographic. We have a deliberate, sequenced strategy that's changing how these users engage with Venmo. At the core is maintaining our leadership as the best P2P platform in the market, attracting more funds into the Venmo ecosystem, driving omni-channel spending, and seamlessly integrating commerce into the Venmo app. We are already seeing results. Venmo is at a clear inflection, with TPV growing 14% in the third quarter, continuing to accelerate from 12% in Q2 and 9% in 2024. Pay with Venmo just hit a milestone, $1 billion of TPV in September alone. And Pay with Venmo monthly active accounts grew by nearly 25% in the quarter. We hit a new record with our Venmo debit card, which attracted 1 million first-time users in Q3, thanks in part to our college partnerships. Monthly Venmo debit actives grew by more than 40%. This has resulted in overall Venmo monthly active account growth accelerating to 7% year over year to nearly 66 million monthly active accounts. From a financial perspective, Venmo is on pace to generate $1.7 billion in revenue this year, excluding interest income. That's up more than 20% and a 10-point acceleration from 2 years ago. Under the surface, we are also changing our revenue mix and growing in high-margin areas. Over the past 2 years, we've doubled Pay with Venmo and Venmo debit card revenue. Not only can Venmo become a more significant revenue driver as it scales, but it is also accretive to transaction margin. And here's what makes this so compelling. We're still in the early innings of monetization. Today, Venmo's average revenue per monthly active account sits at just over $25. While over 90% of Venmo's users engage with P2P, only 5 to 10% are using our debit card or Pay with Venmo, and less than 5% have set up recurring funds in. For the subset of accounts engaged across P2P, debit, and Pay with Venmo, which is still small today, ARPA is about 4x higher. For accounts that are also bringing funds in through direct deposit or instant add, ARPA is 6x higher. In other words, the upside on Venmo's revenue is a multiple of where we stand today. The good news is that adoption is accelerating. For example, new users today are adopting our debit card at nearly 4 times the rate they were 2 years ago, giving us massive runway as we continue driving attachment of these high-value products. This is one of the reasons why we are investing in our college partnerships and introducing unique, personalized rewards that drive multi-product adoption and encourage balanced spending within the Venmo ecosystem. We're also expanding Pay with Venmo into new high-value use cases like our Built partnership for rent payments. At Investor Day, we discussed growing Venmo revenue to more than $2 billion by 2027, and it's clear that the team's execution will allow us to deliver well beyond this over time. Taken together, these businesses, online branded checkout, BNPL, Venmo, and Omni, drove branded experiences TPV growth of 8% on a currency-neutral basis. Moving to our PSP business, Our PSP volume growth accelerated to 6% from 2% last quarter, demonstrating that we are accelerating growth after rebaselining. This growth is profitable and contributed to transaction margin dollar growth in the quarter. We are doing this by continuing to build holistic relationships with merchants. Value-added services like payouts, adaptive payment optimization, and FX as a service deliver real, measurable value, including improvements to authorization rates and cost reduction. We're seeing merchants not only willing to pay for these capabilities, but actively requesting more of our services as they begin to recognize the benefits for their business. As we continue to expand our unified enterprise payments platform globally, we are bringing these margin-accretive services to new merchants from day one. We expect accelerated growth in this business as we expand the adoption of value-added services across our existing customer base and launch with Verifone as our first omnichannel solution provider in Q4, strengthening our position in the PSP market. While we accelerate growth in branded experiences and PSP, we are also aggressively innovating in agentic, ads, stablecoins, and digital wallet interoperability through PayPal World to establish avenues for future growth. I'll highlight just a few of our recent developments. We continue to partner with leaders across the agentic space, including Perplexity earlier this year, and in September, we announced our expansive multi-year partnership with Google to create new AI shopping experiences. This morning, we announced a significant partnership with OpenAI to expand payments and commerce in ChatGPT, including adding PayPal-branded checkout for shoppers and payment processing for merchants using instant checkout. This is a big win for PayPal and our customers. Today, we also announced our own agentic commerce services, which help merchants sell through multiple AI platforms, including Google, OpenAI, and Perplexity. Merchants will have one integration to access consumers through multiple LLMs. Agentic commerce will take time, but we do believe consumer behavior will shift. PayPal is building for that future. Finally, I'm very excited to share that PayPal World is officially in its pilot stage, and the first test transactions are happening this week. I'm proud of the progress that we've made this quarter, from partnerships to new product innovations to continuing to strengthen our profitability. With that, let me turn it over to Jamie to go into the financials in more detail.
Thanks, Alex. Moving to slide 10, PayPal delivered another quarter with good execution and real momentum across the underlying business. TPV and revenue growth both accelerated by 2 points from the second quarter. Transaction margin dollars, excluding interest, grew 7%, continuing the momentum we built through the first half. The drivers of that growth have been broad-based, led by strong credit performance, branded checkout flow-through, improvements in PSP profitability, and Venmo monetization. Growth across these areas was partially offset by higher transaction losses in the quarter. The diversification and quality of this growth is a meaningful improvement from where we were at the start of the company's transformation. We have clear opportunities to build on this progress with investments that strengthen our competitive position and drive durable, profitable growth. Moving back to third quarter financials, non-GAAP operating income grew 6%. Strong operating income, share buyback, and a favorable tax rate more than offset headwinds from lower interest rates, contributing to 12% growth in non-GAAP EPS. Adjusted free cash flow, which excludes the timing impact from the origination and sale of pay later receivables, was $2.3 billion, or $4.3 billion year-to-date. Turning to slide 11, we are driving deeper, more active relationships with our customers. Monthly active account trends showed steady progress, up 2% year-over-year to 227 million. Transactions per active account, excluding PSP, which is a good proxy for engagement, accelerated to 5% growth. Moving to slide 12, total payment volume accelerated to 8% growth at spot and 7% on a currency-neutral basis to over $458 billion. We've moved branded experiences to the top of this slide to reflect the importance of this metric to our more expansive strategy and value creation. Looking across the product portfolio, we see encouraging signs that our initiatives are gaining traction and making an impact. Branded experiences TPV, which includes online checkout, PayPal and Venmo debit, as well as Tap to Pay, posted another quarter of 8% growth. As Alex mentioned, U.S. branded experiences TPV growth accelerated to 10% in the quarter, benefiting from both omni-channel adoption and better trends in U.S. online branded checkout. While debit card and Tap to Pay spend represent a small portion of branded experiences volume today, they are growing rapidly, up 65% year over year, accelerating from last quarter. Venmo TPV growth accelerated 2 points to 14%, marking the fourth consecutive quarter of double-digit growth. On an online-only branded checkout basis, volume grew 5% on a currency-neutral basis. Compared to last quarter, there was less pressure on volumes from Asia-based marketplaces selling into the U.S. At the same time, this improvement was offset by pockets of softer consumer discretionary spending in Europe and the U.S. later in the quarter. Overall, we have seen relatively consistent growth in the number of checkout transactions, but basket sizes or average order value has decreased. While still early in a back-end loaded quarter, we've observed this trend continuing through October. We remain focused on the initiatives we can control. We're confident in our branded checkout strategy and the roadmap that our teams are advancing. The early results in the U.S. demonstrate that we're on the right path with our initiatives, including our redesigned experiences, Buy Now, Pay Later, and Pay with Venmo. We're laser-focused on execution across the three key areas Alex discussed: scaling our redesigned experiences, improving prioritization, and driving biometric adoption. All of this is increasingly complemented by a compelling consumer value prop that differentiates PayPal and Venmo as one of the best, most rewarding ways to pay. While this work is complex and takes time, we fully expect to see our efforts build as we move through the next year and scale these initiatives. Pay with Venmo and Buy Now, Pay Later continue to outpace the market, taking share from other payment methods, growing 40% and 20% respectively. These results give us the confidence to begin making targeted investments in the fourth quarter that amplify the impact of these and other initiatives throughout the portfolio. Turning to PSP, which spans both enterprise and SMB processing, as well as parts of our vast portfolio like payouts, invoicing, and point-of-sale solutions, volume growth accelerated to 6% from 2% in the first half of the year. Our focus on prioritizing healthy, quality growth within our enterprise payments business is contributing to steady improvement in both revenue growth and TM dollars. We expect to see ongoing improvement in the quarters ahead, supported by profitable front book business, our existing merchant base, and the attachment of value-added services. Moving to more financial detail on slide 13, transaction revenue accelerated to 6% growth on a spot basis to $7.5 billion. Other value-added services revenue grew 15% to $895 million, driven by another quarter of strong performance in consumer and merchant credit. We've also been encouraged by growth in customer balances and the impact of our initiatives designed to encourage customers to bring more funds into the ecosystem. While lower interest rates are still a headwind, a portion of this impact has been offset by higher balances. We continue to be pleased with the quality, diversification, and performance of our credit portfolio. In September, we took another step forward in line with our balance sheet light model for credit, externalizing a portion of our short-term U.S. Pay Later receivables with Blue Owl Capital. We ended the quarter with $6.4 billion in net loan receivables, down 8% sequentially. Transaction take rate declined by 3 basis points to 1.64%, driven largely by product and merchant mix, as well as the impact of foreign exchange hedges. This decline was an improvement relative to last quarter and included less impact from foreign exchange hedges and enterprise processing. Online branded checkout take rates continue to be relatively stable year over year, reflecting our transaction and merchant mix, as well as our focus on profitable growth. As I mentioned earlier, TM dollars ex interest grew 7%. TM dollar growth included a 1.5-point headwind from higher volume-based expenses, largely transaction loss provisions, resulting from the temporary service disruption in August, which primarily impacted Germany. There was also a slight benefit, less than 1 point, from the Blue Owl Pay Later externalization I referenced earlier. Setting aside the impact of loss provisions related to the August service disruption, we've seen an improvement in transaction loss rates relative to last quarter. Non-transaction related OpEx increased 6% as we continue to actively manage our cost structure while reinvesting in key growth initiatives. Non-GAAP operating income grew 6% in the quarter to nearly $1.6 billion. Moving to capital allocation, as you saw in our materials and heard from Alex, I'm excited to share that we are initiating a dividend as part of a disciplined capital allocation strategy. Our strong free cash flow generation and balance sheet give us ample room to both deploy capital for growth and return capital to shareholders. In general, we continue to target about 70 to 80% of our free cash flow for capital return, with the vast majority going to buyback. The dividend serves as a complement to our existing buyback plans and will be calculated based on a 10% payout ratio relative to net income. This quarter, we completed $1.5 billion in share repurchases, bringing share repurchases over the past 4 quarters to $5.7 billion. Finally, we ended the quarter with $14.4 billion in cash, cash equivalents, and investments, and $11.4 billion in debt. Moving to guidance on slide 14, following another quarter of strong financial performance, we are raising our full-year guidance for TM dollars and non-GAAP EPS. For the fourth quarter, we expect currency-neutral revenue growth in the mid-single digits. We expect fourth quarter TM to be between $4.02 and $4.12 billion, which represents about 3.5% growth at the midpoint. Excluding interest on customer balances, we expect TM dollars to grow by about 5% at the midpoint, compared to 7% year to date. Setting interest rates aside, there are a few factors to highlight that impact our fourth quarter outlook. First, we have seen strong credit outperformance over the past year, driven by good execution from the team, as well as a more benign loss environment. We expect to see year-over-year comparisons start to normalize more in the fourth quarter. Second, given the performance of some of our key initiatives, we see an opportunity to lean into our competitive differentiation with additional investment to drive faster growth over time. In the fourth quarter, we will begin increasing investments designed to drive product attachment and habituation. Some of these investments are linked to volumes and therefore recorded as contra revenue, impacting TM dollars, and designed to drive additional growth over time. Other growth investments, such as global brand awareness campaigns, typically sit within marketing and non-transaction OpEx. Lastly, on TM, our fourth quarter guide assumes some deceleration in branded checkout growth relative to our third quarter average. From a volume perspective, The most important weeks and months of the quarter still lay ahead. That said, we are planning prudently given recent spending trends and the uncertain macro backdrop. We are also cognizant of lapping strong consumer spending in the fourth quarter of last year. Moving to OpEx, we are planning for low single-digit non-transaction OpEx in the quarter and expect about 3% growth for the full year. We expect to deliver fourth quarter non-GAAP earnings per share in the range of $1.27 to $1.31, up 7 to 10%. For the full year, we are raising our TM dollar guidance by $100 million at the low end and $50 million at the high end to a range of $15.45 to $15.55 billion, which represents 5 to 6% growth. Excluding interest, we expect TM dollars to grow between 6 to 7%. We are raising our full-year non-GAAP earnings per share guidance to a range of $5.35 to $5.39, growing at 15 to 16%. Our guidance continues to project approximately $6 billion in share buyback and full-year adjusted free cash flow of approximately $6 to $7 billion, which excludes the timing impact of the origination and sale of pay later receivables. I'd like to wrap up by thanking the PayPal team for their hard work and execution this quarter. We are making tangible progress across the business, and the foundation we're building positions us well for continued growth ahead. With that, back to you, Alex.
Thanks, Jamie. We are operating from a position of strength. The results you're seeing are proof that our strategy is working. We built a more balanced, profitable growth engine across branded experiences, PSP, and Venmo, and that's exactly what we set out to do. We're investing in high-impact growth initiatives that will move the needle and future-proofing the business with critical partnership, while simultaneously returning value to shareholders through our buyback program and our newly launched dividend. We've moved this business from defense to offense, from stabilization to acceleration. We know exactly where the opportunities are, and we are laser-focused on executing our strategy. With that, Steve, let's go to Q&A.
Before we open the lines for Q&A, I'd like to ask everyone to limit themselves to one question so we can get through as many of your fellow analysts as possible. Sarah, please open the line.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Tien-Tsin Huang with JP Morgan. Your line is open.
Hey, thanks a lot. Good morning here. I just want to ask about agentic commerce. It's a popular topic here at Money 2020, and I'm not sure how to ask it, Alex and team, but maybe I'll just rapid fire if you don't mind. Has agentic commerce changed PayPal's strategic priorities in any way? What's your right to win? Can you fully fund investments here without sacrificing your incremental margins? And of course, you've announced a lot of key partnerships like OpenAI today, Perplexity, Google, etc. Do you have the coverage you need to drive ubiquity, or is there more work to do on the partner front? It seems like there's a lot of talk about collaboration, and you guys are definitely in the center of all that. So just love to hear your thoughts on all of that, if you don't mind. Thanks.
Love it. Thanks, Tien-Tsin, and hope you're enjoying Monday 2020. We've got a good contingent there as well. To hit on a few of those, so first, from a prioritization, from a priority question, not really, right? Our strategy we've laid out very clearly is that we want PayPal to be available anywhere and everywhere that consumers want to pay, and we want merchants to be able to sell to consumers anywhere and everywhere. And we've talked about this even back at Investor Day, where we laid out we want it to be online, we want it to be in person, and we want it to be agentic. And so agentic is just an evolution of this strategy. In terms of our right to win, we actually think we're extremely well positioned to win here. Let me just lay out a couple of the different components. So first, on the merchant side, merchants are going to need to figure out how to integrate with each of these LLMs. And that's hard because there's multiple LLMs that are out there. And whether you're a large enterprise or a small business, you really don't have the bandwidth to go figure out how to integrate with each and every one of these LLMs, make your catalog available, understand the identity and fraud protection that comes with each of these different elements. And so, what we announced today was our PayPal Agentic Commerce Services, which enables merchants to integrate once with PayPal, a partner that they've known and loved and integrated with for years, and be able to orchestrate their services to every LLM that's out there so that they get full coverage of consumers. So that is a huge win for merchants. We give them seller protection. We give them the ability to scale across all the different LLMs. From the consumer standpoint, we're, again, very well positioned. We've got the largest wallet ecosystems that are out there, and our ability to give consumers the trust, the safety, the buyer protection, and the ability to get access and make purchases on any of the LLMs they want to is a huge win. They get to use the wallet that they know and love and have a great end-to-end experience, which includes not only the purchase through the LLM, but also then all of the things that happen afterwards, whether it's package tracking or customer service or returns. So that's, again, a big win for consumers. And then for the LLMs themselves, it would take over a decade if they wanted to go and try to build the same kind of merchant ecosystem of the head, the torso, and tail of merchants that PayPal has established over the last couple of decades. And so instead, they get to partner once with us and get access to tens of millions of merchants with identity, authentication, fraud protection, and payment processing on a global scale. And so we really feel like we're connecting this ecosystem together. It will take time for agentic to eat into overall purchasing. But if you think about, we want to meet customers where they are, online, offline, agentic, and PayPal's in a very strong position there. As far as investments, Jamie, do you want to hit on that?
Sure. So these partnerships do entail some level of investment, whether that's in product and tech or around co-marketing, things that really drive usage and habituation around the product. And, I mentioned in my prepared remarks that we would begin reinvesting some of our margin dollars in the fourth quarter to really amplify some of our product initiatives. And between, the push into agentic and that, some of those investments are likely to be a near-term headwind to how fast TM dollars or earnings grow next year. But we are really excited about understanding what's working and really putting our dollars behind that in the core business, in addition to really advancing our initiatives across the business on things like agentic.
And the last part of your question was ubiquity. We obviously feel like we've got the largest breadth of merchants. We obviously have the largest breadth of consumers. And now with the partnerships, we've already announced OpenAI, Perplexity, Google, and as we look to partner with any of the LLMs that are out there, we think we've got actually quite good scale and ubiquity across the ecosystem. So very well positioned to win as agentic commerce continues to evolve.
The next question comes from Harshita Rawat with Bernstein. Your line is open.
Hi, good morning.
Good
So I
morning.
want to ask about branded. I know you highlighted some headwinds in the 5% growth number. You kind of highlighted some kind of deceleration in the fourth quarter. But I'm also thinking you have some benefit from Pay with Venmo and the Buy Now Pay Later promotion in the holiday season. So, going back to the Investor Day, you kind of laid out the path to branded acceleration. I know it's not linear, so how should we think about just the overall path from here? Or should we focus more on the slide 4, right, like that you highlighted, which is very helpful, which kind of focuses on more diversified drivers of growth? Thank you.
Yeah, Harsha, maybe I'll answer that in two parts. I'll talk about fourth quarter and then really talk about the broader investor framework. We've had consistent mid-single-digit growth in branded checkout for multiple quarters now. And for the quarter, we've seen really good momentum across our growth initiatives with Buy Now Pay Later, with Pay with Venmo. and we've seen continued U.S. growth at higher rates as well this quarter. When we got into September, we began to see macro-related deceleration, and that is both in the U.S. and in Europe. And I talked about it in my prepared remarks, but really a relatively consistent number of transactions, but we're seeing basket sizes just trade down, average order value being down, particularly in retail where, consumers are just being more selective. And that behavior has continued into October. So obviously, it's really early in the fourth quarter. The holiday season is very back-end loaded. So it's something we're watching. But we did call out, and you're right, our guidance assumes a rate of growth lower than of third quarter. And so when you look at that macro, and I pivot now to talking about the broader framework, we've seen very good progress. And I think what I'm most excited about is we know what's working, and we're really doubling down against that. And Alex has talked a lot about Buy Now, Pay Later. We've talked a lot about Pay with Venmo. And, importantly, year to date in the U.S., our growth rates are higher than what we saw year to date last year in the U.S. So we're really seeing nice progress. But that macro piece of it, whether it's tariffs or, some of this deceleration, is offsetting our progress. And we set those 2027 targets assuming a consistent consumer macro environment. And ultimately, that's how we'll measure progress against that. What I am excited about is we have scaled our initiatives in the U.S. first. And so where we see progress, we've got real confidence as we scale outside of the U.S. and internationally. I think we've invested in the right products. We're seeing customer adoption and engagement around the things we've talked about, in addition to things like Omni and places where we get other halo effect. And the investments we're making are really predicated on our confidence and our ability to continue to build on our progress as we get through the next couple of years.
The next question comes from Dan Dolev with Mizuho. Your line is open.
Hey, guys. Great results, as always. Just wanted to ask a quick question and a very, very short follow-up. So on Buy Now, Pay Later, huge momentum here. Can you maybe give us sort of the lay of the land, like how you view, Alex, the industry? Who are you gaining share from most, and in what territories? And if I just have a super quick follow-up for you, Jamie, on the investments next year, if there's any way to quantify that, that would be great. But those are my questions. Thank you.
Great. Thanks, Dan. And, look, we're very excited about BNPL. We see this as one of those generational shifts that's happening now. We're seeing not only in the results, but also just as we talk to customers, particularly a younger generation, is moving more and more towards debit, and BNPL is the way that they want to make purchases. And we think we're incredibly well positioned to win there. As you said, we're seeing good growth. We're actually seeing growth across the board. U.S. MAAs are up 21% in Q3. TPV continuing to grow pretty consistently over 20%. And again, this is a product that people love. An NPS of 80 is quite incredible. And so from a strategy and a share perspective, we think we have something unique. We have a brand that people know and love. We have a global scale. So not only seeing good gains in the U.S., but we continue to expand our global footprint. It just expanded to Canada within the last week or so, and continuing to expand the offerings across the board and across Europe. We're also moving to where customers want to pay as well. So not just online, but moving in-store. We started in Germany and now expanding that in the U.S. So we really see BNPL as one of those growth drivers for us. The other big shift that I would want you to be aware of is most of our BNPL, and again, we're on track to do $40 billion or so of TPV in 25. Most of that has come almost after they've chosen the PayPal button choice. And for many customers, that's actually too late. They want to make a choice upfront when they're making that purchase, and they want to see what that payment could look like if it was split into a few payments. And so strategically, we're now meeting our customers where they are, and think we have a really exciting expansion opportunity to be upstream in presentment. again, with a brand that people know and love, with a product that they're already familiar with and using, when we get upstream into some of these purchases, we think we have the opportunity to continue to accelerate. So very excited with BNPL and something that we're going to invest in to win over the next few years.
And Dan, with respect to the second part of your question, it's early. We are still working our 2026 plan, and we plan to take you through that on our February earnings call. When you look at the types of investments that we're talking about, these are targeted really around product attach and habituation. So things like merchant co-marketing, cashback offers and rewards, and things around better placement and presentment. So things that drive right back into the business and around growth. But we'll have some more information for you on that in a couple of months.
The next question comes from Sanjay Sakhrani with KBW. Your line is open.
Thank you. I want to dig into the really strong growth momentum at Venmo, where the revenues have been consistently growing 20%. And Alex, you mentioned sort of the multiplier of upside from here. Could you maybe map that out for us in terms of how we should think about the growth rate you've posted recently and what you could do next year and beyond, given all the different initiatives you have in place inside of Venmo?
Yeah, thank you. We Sanjay, are equally excited about the trajectory that Venmo is on. So let me just pull back and talk a little bit about where Venmo was a couple of years ago and the contours of where we're moving. So Venmo a couple of years ago was an incredible P2P product, a brand in the U.S. that was a verb. It was the way a younger, very valuable demographic was moving money amongst themselves. So that was a very strong starting position. The challenge was we really weren't meeting customers where they are. Money was moving from a P2P perspective, but then, again, if you were splitting a meal, you couldn't actually pay for that meal in person. You had to use a different instrument. We've expanded what Venmo means to this demographic. We're now meeting them where they are and enabling them to make purchases in person, online, move money between each other, as well as starting to think about different experiences that they're having together. And I'll touch on that in a minute. So if you look at what that means, it means that not only are we continuing to grow our active base, so MAA is up 7% year over year, at 66 million. That's very strong. But now we're starting to see real penetration into two of our monetization levers. So debit card MAAs are up 43%, Pay with Venmo MAAs are up 24%, and this is starting to drive ARPA up. So ARPA is up mid-teens year to date. When you put all of that together, I still feel like we're just scratching the surface. If I look at us versus peers from an ARPA perspective, we are a third to a quarter of what I believe our potential is over time. And we're starting to now see really good adoption of the cards that we're putting in, the debit card and Pay with Venmo. So again, all of the trajectory is moving in the right direction. And then what you're going to start to see on top of that is new products and services coming in. So the way that we've talked about it is Venmo is a social product. It's the product that you're using oftentimes with other people. So you look at the announcement that we made yesterday with Built to be able to make rent and mortgage payments. Oftentimes, this is a demographic where they're making rent payments because they're living with others, and they were using Venmo after the fact to move money across. Now we're enabling them to make their rent payments and split their rent payments upfront with that kind of partnership. You're going to see more of those types of things from us over the coming months as we start to think about all of those experiences that this incredible demographic is using to be able to move money across. And so, again, we think we're just scratching the surface of the ARPA that's available. We have good proof points of the monetization levers of debit card, Pay with Venmo, and now we're expanding into other experiences where folks can go. And our go-to-market campaigns are working as well. You've seen the success of the college partnerships that we put out. That drove over 1 million FTUs of debit card in Q3 alone. So again, really, really excited about where this is going. And it's starting to bring in very, very valuable merchants as well. So whether it's eBay or Ticketmaster, Sephora, Taco Bell, DoorDash, TikTok, these are all merchants that really want access to this demographic. and Venmo is the best way to get access to them. So just getting started, excited about the growth trajectory, and we expect this to continue well into the future.
The next question comes from Darrin Peller with Wolfe Research. Your line is open.
Hey guys, thanks. And congrats on the OpenAI and the dividend announcements. I just want to touch on the exit growth rate of the year for a minute. I know you're guiding 2 to 5% for transaction margin growth. So maybe the puts and takes of what that could compare when you think about trending into 2026, how we should think about next year in the context of the exit rate. And then maybe just, I know you talked about investments being made, obviously, for all these initiatives. So how does that impact our thought process on operating leverage and just overall investment, EPS potentially for next year as well? Whatever you can comment. I know it's early. Thanks, guys.
Yeah. Good morning, Darrin. I'll stay away from giving 2026 guidance, but I will give you some color on the fourth quarter transaction margin dollars and what we expect to see there. To some level, we've got some impact from interest rate cuts coming in the fourth quarter, but really in the credit business, we've got tougher comps. You may remember that we really got that business back to growth in the fourth quarter of last year. And so we just have tougher comps coming into the fourth quarter this year. And I mentioned some level of investments in growth initiatives as well. And with what we're seeing on macro, we want to be prudent in terms of how we guide there. And then across the portfolio, the product initiatives, I think what's probably important to call out is that some of this goes through transaction margin dollars. Other parts go through OpEx. I mean, things like investment in product and tech and brand marketing, things like that go through OpEx. So as we work our plan, we work across all of that to really get to the right mix as we get into it. So we'll take you through more in a couple of months, but hopefully that's some color for you.
Hey, Darrin, I want to, without going into the details for next year, I do though want to set a mindset for us because this is what we're thinking about internally. I've mentioned, and we've talked about it so far on this call, a couple of big shifts that we see in the market, and I want to call that out. We see three pretty significant generational shifts right now. One is a massive shift to digital wallets, and this is globally. The second is a real shift to buy now, pay later. Again, a younger generation that's now moving the way they're spending, and this we think can start to take share away from credit cards and be the way that this new generation is going to start to pay. And then the third shift we've talked about is towards agentic commerce. These are all three massive shifts that can recast the entire commerce landscape, and we think we're extremely well positioned in all three of them. If you look at digital wallets, we have leading wallets such as PayPal and Venmo we just talked about, and we have our expansion into PayPal World, which continues to connect wallets around the world. In buy now, pay later, we just talked about upstream presentment. We talked about the expansion and the trajectory we have there. And then we've talked earlier about agentic commerce and the shift that's happening and our ability to lean in and win. The mindset that we have from a company is these are generational shifts that we are well positioned and we must win in. And so we are going to invest appropriately. Those investments may very well lead to some near-term headwinds in how fast TM and earnings grow in 26. We'll come back with more details as we think through that. But again, our goal is to win these markets and set ourselves up for faster, durable growth in the future across all of commerce. So I just wanted to set that tone.
The next question comes from Jason Kupferberg with Wells Fargo. Your line is open.
Good morning, guys. Thanks for taking the question. So you obviously had a nice beat here on TM dollars in the quarter. It seems like the branded business came in right in line with your expectations. The OVAS revenues were quite strong. So I wanted to just unpack the sources of TM upside in the quarter a bit. If you can give us a relative sense on how much of that upside came from the credit products versus some of the other drivers, and then just any quick comments on how you see cadence of additional penetration of the new checkout experience moving beyond the 25% level as we move into next year. Thanks.
Thanks, Jason. Good morning. Really, when you look at third quarter transaction margin dollar performance, we had meaningful contribution across each of branded checkout, Venmo, PSP VAS, and credit. And I think what's important there, and we really tried to highlight this in our prepared remarks as well, is that we've got nice diversification, not only on the revenue side, but on the margin sources. And I think that that's demonstrative of that.
Yeah, and on the penetration, we've talked a little bit about it, but again, just to set the tone, we really started in the U.S. We now are roughly 25% of global transactions. Even under that 25%, though, about half are actually optimized, and so we're really working through how do we nail the overall pay sheet improvement, the biometrics that we're starting to put together. When all of that comes together, the pay sheet and the biometrics, we're actually seeing conversion rates increase 2 to 5%. So we know we have a winning product. It just is taking time. And look, I'm as impatient as anyone. I want to see this move as fast as we can. But we're talking about bending the curve on over $500 billion of spend, and it's just taking time to get there. So we have confidence, as Jamie mentioned earlier, U.S. branded checkout is growing faster year to date than it did in 24. So we know the experiences are working. We're now rolling it out in Europe. We expect that to continue through 26. And in the meantime, we're leaning into BNPL growing north of 20%, Pay with Venmo growing north of 40%. And so we know that overall in branded checkout, we're on the right path. It's just taken time.
The next question comes from Will Nance with Goldman Sachs. Your line is open.
Hey, appreciate you taking the question. I wanted to dig in a little bit on the BNPL volumes. So just a couple questions here. I guess first, if you could just quantify some of the run rate financial impacts you're expecting on the Blue Owl offloading, I guess and any help with the geography of those impacts on the P&L as we think about that going forward. And then just maybe a big picture question on the BNPL growth. Obviously very strong. I think, you've said in the past that the branded numbers or the branded volumes are roughly 40% US, 60% international. Do the BNPL volumes skew meaningfully differently, and just any color on what you're seeing from a geographical perspective in terms of adoption and penetration of branded volumes in BNPL? Thank you.
Yeah, so let me take that second part, and then Jamie can lean in. So, BNPL, right now we're looking at less than 30% of originations in the US. So this is still a very global business, but it's one where, as I mentioned earlier, what we're excited about is really an expansion of our strategy into upstream presentment. We think that's going to be a big shift and opportunity for us, as well as a change as we start to expand into omnichannel. And so, being able to move buy now, pay later into in-store. It's interesting, the dynamics of how we're seeing people shop is it's not just hard lines of in-store or e-commerce. There's a lot of people that are shopping on their phone and then wanting to pick up in store, and that's where they get the opportunity to do their buy now, pay later purchase. So all of this is coming together in a holistic product. And again, we're seeing the flywheel effect of BNPL as well. When somebody starts to leverage BNPL, there's a lift in engagement, their TPV's up 35%, and we start to see their ability to use us for all purchases. And so, this is, it's very interesting just to see the dynamics of purchase behavior. I think in the past, as e-commerce and commerce in general was evolving, there were much harder lines. What we're seeing from customers now is they want to pay when they want to pay. Sometimes it's pay now, sometimes it's pay later. Where they want to pay, online, in-store, or agentic, and how they want to pay, whether it's with their friends, whether it's with crypto, whether it's the wallet from their home country. And we're now have a strategy that enables to meet them everywhere they are. So exciting trajectory there. And again, you're going to see us lean in even more into BNPL over the coming years.
Yeah, and with respect to the first part of your question on Blue Owl, we had a small impact in the quarter, but that was net neutral to operating income, which both raised margin a bit, but also was offset in OpEx. And with respect to 26, there's a small impact to 26 OpEx in terms of increasing the run rate.
Hey, Sarah, let's make time. I know we're past the top of the hour, everybody, but let's make time for one last question if we can.
Thank you. Your last question will come from Timothy Chiodo with UBS. Your line is open.
Great, thank you. I think we've covered some great numbers on the BNPL business today. I was hoping we could round it out with a few more, and this would help us in comparability to some of the competitors in Affirm and Klarna. I was hoping you could give a little bit on the mix of Pay in 4 versus some of your longer term pay monthly loans. Also, maybe touch on the loss rates. And then what I think investors really want to get down to is balancing those losses and potentially more favorable funding mix for the repayment. What really is the transaction margin dollar net take rate per unit of BNPL volume so that we can compare that to metrics like RLTC as a percentage of GMV for a firm? Thanks.
Good morning, Tim. You've packed a lot into that, so I'm hoping I remember it all. Let me start with sort of thinking about unit economics on the core product. And, first, with respect to what type of product is it, most of this is pay in full, pay monthly. We've got about an average turn on the portfolio of buy now, pay later of about 40 days. So when you think about that compared to peers, it is, the duration of the portfolio is a much higher turn than maybe some of the others you look at. Secondly, as we price it, our economics are on par or better than our peers. But the thing I'd really point you to here is when we look at BNPL, we do run it at the business level, but we look at it much more holistically at the total branded checkout or PayPal level around how do we habituate and engage our consumers around the brand and across the brand and drive sustained lift or a halo across that with BNPL adoption. It just drives stickiness. And we really see a 30 to 40% sort of incremental usage of branded checkout, and that stays with us as the consumer continues to spend with BNPL. We're expanding through new geographies, as Alex mentioned, really focused on driving consumer experience and marketing dollars. But hopefully that gives you a little bit of color as to how to compare.
Hey, Alex, any final thoughts before we wrap?
Yeah. So thank you, everyone, for your questions. As you can hear from us, it is an exciting time at PayPal. We mentioned some of these significant generational shifts, and that makes it exciting to be at the forefront and a leader in this space. So we've got the right plan. We're making great progress and delivering results along the way, and look forward to updating you as we continue to make progress. Take care, everyone.
Thank you. This concludes today's conference.
Okay.
Thank you for participating.
So this was a good call, good earnings report as well. Yes, the stock was higher. Now the stock is at $76.07, up around 9% or so. Again, it was a bit higher. But all in all, the most important part to me is that finally they're not, and by the way, let me know if the mic volume is fine, because I do know that the earnings call was a bit low. But finally, they are not afraid of being a bit more aggressive. This is something that I've been saying for a while now. Okay, you come in, new CEO, but it's been 2 years. You want to be conservative. Yes, like you said, I mean, adding or trying to turn things around when you generate $500 billion, well, money flowing is $500 billion. That's someone that said, growth was 8%, only 8%. It's 8% TPV. That's $458 billion. $458 billion in just one quarter. But yeah, all in all, I mean, I'll do a specific video recapping everything whenever I have the time. But I know everybody asks questions about the dividend part. So this is basically it. It's 14 cents that has been announced right now. Okay, this is 14 cents payable December 10th to stockholders of record as of the close of business November 19. So if you have PayPal shares as of November 19, you will get 14 cents per share. And they said here this represents a targeted payout ratio of around 10% of non-GAAP net income. Again, it's not dividend or buybacks. It's now dividends and buybacks. You know me, I would rather see this company just buy back as many shares as possible. But yeah, I mean, if the market likes the dividend, because this might also push some fund eventually, dividend fund that is, to maybe buy PayPal shares. So that could definitely push the stock up even more. But I guess they feel comfortable with the way the business is going, being profitable, growing, buying back shares, and now also being able to issue a dividend. It's quite impressive. It's quite impressive. Now, a couple of extra things here. couple of extra things, which were also very impressive. First of all, branded experiences TPV up 8%, as we've just discussed. And this is, look at this. Let me zoom in a little bit. Launch of PayPal everywhere in the United States. This was US branded experience TPV growth when they launched. Look at what has happened afterwards. Clearly they're doing something right. Clearly they're doing something right. That's not all. The buy now pay later business. Yes, okay, I will say this. I will say this before talking about buy now pay later. It's quite a shame, no, that we didn't hear anything about the advertising side of things. I guess when you announce that you're going to be the first wallet in ChatGPT, then you might not have time to talk about everything. But yeah, ads, we didn't really get that much information about it. I still stand with what I said. I think ads will get a lot more focus in 2026. So maybe already starting Q4. But 2026 is when I think we should be getting a little bit more information on the ads business, because yeah, it's going to be huge in my opinion. But the buy now pay later business, I mean, around $40 billion expected 2025 buy now pay later TPV, over 20% TPV growth, over 20% MMA growth. It's MAA growth, sorry, MMA. By the way, did anyone watch the Aspinal Sirigane fight? Well, fight's not really a fight, but whatever. This is insane. This is incredible, incredible growth. And this again, a standalone business, because we've seen other buy now pay later companies trade as standalone companies, but here you're getting that inside of PayPal. What we're also getting here is Venmo. This is still underappreciated. And I mean, look at this, around $1.7 billion of expected revenue for Venmo in 2025. $1.7 billion. It's already a huge chunk of PayPal's revenue. Not huge, but it's getting bigger and bigger. Over 45% of Venmo revenue growth comes from Pay with Venmo and Venmo debit cards. 20% Venmo revenue growth for Q3. 66 million Venmo monthly active accounts, growing 7%, and over $25 here Venmo ARPA. I mean, incredible stuff. I know we've been comparing a lot with XYZ, with Block, Cash App, but I think Cash App has been, for the last 4-5 quarters or so, at the same monthly active accounts of 57, I believe. But Venmo here, incredible stuff. Then we have this. This was also one of the things that we were looking at. PSP TPV growth. This is what they told us, I believe, in the investor presentation, I think, where they basically told us, look, Q3 2025, this is the quarter when we're going to see things accelerate. This is exactly what we're seeing right now. So last quarter and the last couple of quarters been like, oh, this thing doesn't grow. What is PayPal doing? Doesn't make any sense. But now, actually, everything they told us is happening. Buy now pay later is getting bigger and bigger and growing faster. Venmo is getting bigger and actually being monetized into something incredible. This PSP also growing. Branded checkout, they said, look, it's going to take, it's working. Just to see the real results, it's going to take some time. But this is basically what we're getting here. PayPal World pilot going on right now. That's very, very good to know. Yes, agentic, it's good for the headlines, right? The OpenAI deal, the Google one, the Perplexity one, that's all good. I mean, it's better than good, because optics-wise, it again puts PayPal at the front. Previously, people were complaining about, oh, PayPal doesn't innovate anymore. There is Google Pay, there's Apple Pay. By the way, Google and Apple Pay have been there for a long, long time, and yet PayPal continues to grow in line with the overall payments market, just so you know, plus they work with them as well. But making sure that, okay, they see this agentic wave, they're making sure that they're there. Same with the crypto and the stable coins here. Okay, we're moving that way. We want to be there. We don't want to be left behind again. So that's great. And then the ads business, well, again, we'll see. We'll see if we get more comments next quarter. If I do miss some messages, I apologize, because I am on the move, and I only have I only have one screen, so I have to go like back and forth. Why didn't you bring your second screen? I forgot. So it is what it is. But yeah, Adjusted free cash flow last quarter was pretty low, but the guidance stayed the same, which meant that Q3 and Q4 were going to be huge quarters of adjusted free cash flow. The guidance for the year remains unchanged. Active accounts grew 1%. So here again, who uses PayPal? Well, 1% extra uses PayPal here. Monthly active accounts grew 2%. Number of payment transactions did drop 5%, reflecting price to value actions driving lower enterprise payments transactions. Again, this is something that they deliberately started to do a couple of quarters back. Profitable growth, but I do think that we're going to see things go in the right direction. Then remember this atrocity last quarter. Basically PSP, payment service provider, last quarter only grew 2%. Right? Previously, Braintree and all of that was growing 12%. But then they said, look, we're not going to grow at all costs. This just doesn't make any sense to us anymore. And so, yes, growth did come down 2% only in Q2. But look at this, already at 6% growth in Q3. And just so you know, because people think, oh, who uses PayPal, right? Who clicks on the Pay with PayPal button? Doesn't make much sense. Well, first of all, if you look at TPV, the total payment volume of the overall business, Venmo makes 19% of it. PSP makes 45% of it. Just so we're clear here. Yes, overall here, branded checkout online, 29%. But still, Venmo, 19%, PSP, 45%. So a lot of the times when I hear the arguments of, oh, who uses PayPal anymore? Well, you have to know that the majority of PayPal's TPV is being used by, well, people that you probably don't know, unless in the United States, because that's Venmo. But the payment service provider is 45% of TPV. It's huge, okay? It's huge. And now that we're seeing this start to accelerate, very good, very good. As for the rest, the guidance here, transaction margin dollars has been raised for the year. We see EPS change as well. Free cash flow remains the same. Share repurchases remains the same. So again, they can repurchase an insane amount of shares. They will also be paying us a small dividend. So to me, I'm very happy. I'm very happy with the stock. I'm very happy with the stock now that it's up a little bit more. Yeah, definitely, because my options will probably be in the green. I know some people have questions about that. As you know, I have March and June 2026 $100 strike price, 120 January 27, and $90 127, and then I think I put $2,000 in $100 strike price January 2026. So the one that the soonest. This is probably the only one where I might just cut it because it's very small. Was a bet to see if we really get a huge move in the coming month, but the rest, I don't see why I should be selling as of now. We have 2 rate cuts coming up, one that will be announced this week, and then another one in December. We will have another Q4 earnings report plus guidance for 2026 before the March options expire, and definitely before the June 26 expire. So I'm not touching those. Might touch the January one in the upcoming weeks or so. I just wanted to show you also that the last time that we were here at $77 was that Thursday before that Friday where everything pulled back. The stock did fill here a huge gap from the previous earnings report, or almost filled that huge gap. Maybe we'll try and fill it completely now and then make our way above $80. Remember, at the start of the year, we went at, we're at $90, $92 or so at the start of the year. PayPal today is a much better business than at the start of the year. Currently, we see here that United Health is also up 3.8%. I didn't check anything. Sofi is also up 3.2%. I do want to touch on Sofi in a bit. So if any of you have questions, I am now looking at the chat. So if you have any questions, you can ask it right now about PayPal or I'm watching UFC. Well, I used to watch way more because it it was a bit more exciting, I think, before. Today, you have so many things that change and scandals and whatever. But yeah, I do like to watch it from time to time, for sure. Also, I definitely like to watch it when it's not at 5 a.m. my time, like PayPal's earnings report. And I do appreciate everyone joining. So I know it's very early for. I don't know how you guys on the West Coast do these things. Like I'm still jet lagged, so to me it's like almost lunchtime or whatever. But it's 5 now. It's 6 a.m. Congrats to everyone that actually wakes up for these things at 4 a.m., 5 a.m. Bravo. The East Coast, you're already at 9 a.m. So you don't you don't get the praise. You don't get the praise from me as of now, but I do appreciate you coming back. Why did PayPal start dropping during the call after the run? Why? Good question. Probably because the CFO was being a bit more conservative again on some things that they are seeing. But I'm not complaining. I think the implied move after earnings was between 8 to 12% or so. I think I checked that yesterday. So that's that. But PayPal. But Sofi is up. Okay, Sofi is up 3.2%. Why is it not up more? Because it's a triple beat and guidance is raised, right? As expected. As expected. So these were my predictions for Sofi Q3. This number right here, I got influenced by the Sensor Tower data that Tanner shared. It's not his fault. That's my fault. But okay, I was wrong on this. Definitely wrong on that. Galileo came in better than expected. Adjusted revenue came in just above my prediction. Same with adjusted EBITDA and EPS of around 10 cents. EPS came in, as I will show you. Wait, as I will show you. And the slide doesn't show. So I cannot show you. Because it's invisible. Incredible stuff. These were the actual results. So new members, 905,000. CAC is 316, which again makes sense because the members came in lower than what I expected, so that has to go up. Galileo revenue, $114.5 million, so that's up quarter over quarter, but it's still dropping when you look at the accounts. When you look at the accounts, adjusted revenue $950 million. I put it at 940, so that came in better than expected, but quite close. Adjusted EBITDA also very, very close here, $277 million, and EPS of 11 cents. Very good. Now, by the way, I know this might sound crazy, but we talk about Sofi, but you know that they are called. The name of the company is called Social Finance. Everybody's calling it Sofi. I know that's what it stands for, Sofi, but imagine if we called Sofi from now on, oh, have you seen Social Finance stock today? That has gone up. Social Finance. Sofi just rolls better, I think. Guidance was raised for Sofi. Now here is where I have some big questions. So first of all, we, again, as expected, triple beat, guidance is raised. My question now is, again, this does not make any sense. Q1, adjusted net revenue, $770 million. Q2, $858 million. Q3, right now, $950 million. And they are expecting adjusted net revenue for the year to grow 36% to around $3.54 billion. Now, to reach the $3.54 billion, Q4 will be a $797 million quarter. Lower than Q3, lower than Q2. Either my math is wrong here or something's wrong. But I mean, you just have to add up the last 3 quarters to reach what's expected from Q4 guidance. Very strange. Very strange. Then Then, and this is not surprising, EPS is now expected to be 37 cents. The prior guidance was 31 cents. Again, it didn't make any sense. It did not make any sense because in Q1 we were at 6 cents, Q2 8, we're now at 11. Since we're now at 11, that means that next quarter we are supposed to be at 12 cents to reach the 37 cents for the year. Will it to come in higher? I mean, I guess so. I guess so, because currently they are beating their own estimates quite easily. Moving on to the next one is the member growth. This also did not make any sense at the start of the year. Oh, we're expecting member growth of at least $2.8 million, 2.8 million members. Remember that number at the start of the year? Didn't make much sense. Right now, last quarter, they told us 3 million, at least 3 million. Now it's at least 3.5 million, representing around 34% year-over-year growth. Currently, we are sitting at 2.553 million out of the 3.5 million, which means that next quarter, we are also expecting to have a decent 900, well, I would say around a 900,000 member quarter. So maybe not a million, although who knows, they might surprise us. But the adjusted net revenue thing doesn't make much sense. Unless I don't know if someone listened to the earnings call and they said something for Q4 adjusted net revenue. But currently, these are the numbers. These are the numbers for Q1, Q2, Q3. It's 957, not 700. And wait, I didn't even calculate my own. Wait, let's see. 77858 9 plus 797. Correct. It's too early. It's too early. Wait, so let's do that. So up until now, that's 2.578 billion. They're expecting 354. Correct, 962. I know why. I know why. 962. Okay, that makes a little bit more sense. Disregard what I said before. 962. Because previously I had here I was probably looking at this guidance right here, like an amateur. But again, it was very early. Okay, it was very early. Okay, this makes a bit more sense, but still very low, in my opinion. $962 million in adjusted net revenue expected in Q4. Easily beat. Easy. I don't see how they. I mean, they've been beating their own estimates quite easily every single quarter, and so I don't see why that will not happen. Why that will not happen right now. We are opening the market right in 4 minutes, I think. Correct me if I'm wrong. I know this whole time zone change to me is okay. Yeah, okay, we are. This whole time zone change to me is crazy, but for Sofi, there were a couple of things. So this is still fine. Adjusted net revenue. This is also okay. Fee-based revenue on an annualized basis, $1.6 billion. That's crazy. This here, fee-based revenue for the quarter as a mix is 43%. Can someone remember what it was last quarter? Because last quarter, is it possible that it was higher than this or not? Of course, in the video, I'll have everything covered. But yeah, I don't know why. I have a feeling this number was a bit higher last quarter, but okay. Adjusted EBITDA margin, very nice here, 29%. Rule of 40, well, in this case, rule of 40 is 67, which is also something that we've talked about. We've talked about before. I think they talked about rule of 60. So 38% adjusted net revenue growth and then 29% adjusted EBITDA margin. incredible performance. The one thing that where is it? Lending segment still doing okay. Contribution margin and profit. Margin is down a little bit, but there's probably a reason for that when we'll have to look at it a bit deeper. This year, last quarter, remember this student loan net charge-off jump? They explained why, and then for Q3, that is already down. So they said it right here. Student loan net charge-off in Q2 included the discrete impacts from switching loan providers. Nothing to freak out about it because it's already following the downtrend. Technology platform. So that's up quarter over quarter, year over year. Contribution profit is basically, well, not flat. It's down. Contribution margin is down here as well. But technology platform accounts did drop. So last quarter, I think it was 160. Now we're at 158. How do you come up with the 7? No, it was a typo. I was still looking at the other guidance. Too early. Apologies. So is it 1 minute or is, yeah, well, why would it be 33 minutes? That doesn't make much sense. So let me prepare that already. But yeah, this is, again, technology platform. Revenue is up. Platform accounts is down for the quarter. And then guidance, we just touched on it. So, I mean, all in all, I don't think we can complain. I don't think we can complain about anything right now. Okay, we are open. You are open, ladies and gentlemen. The market is open. Ding, 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 bing, bing, bong, bing, bing, bong, bong. We are open here. First live stream, West Coast, 6:30 a.m. for the Couch Investor channel. We are open. Stocks are, well, the heat map will update, as you know, over the next couple of seconds. We can already see who's up and who's down. PayPal is now only up 7.5% after being up, well, I think 14% pre-market. Sofi is up 2.5% right now, but we'll let it do its thing for the next couple of seconds. It's definitely better than being down. That's for sure. It's definitely better than being down. We don't have that many red names, right? We don't have that many red names. What I'm seeing here is Zeta is down almost 2%, new 0.7, applied 0.7, then the rest is barely down a little bit. PayPal is now dropping. Well, dropping. It's still up 6%, but it was up a bit more than that. Maybe people are happy to take profits already. Well, in my opinion, would be foolish, but you do you. PayPal is at $74 right now. This is quite crazy. PayPal puts up an amazing quarter, issues a dividend, which usually the market, I guess likes, uses OpenAI as a name in a press release to announce something. Stock is only up 5.5% when the market opens, and we also don't really have any macro scandal, I would say, any macro scandal on the day right now. We do have a rate cut coming up, and we do have a Trump and Xi meeting as well Thursday, which in itself should help our dear pain pal go up a little bit more. But no, I guess the market is like, nope. You enjoyed your pre-market action, but we are going to pull this thing down even further, which again does not make much sense. But previously, again, we have been here. What is it? A couple of weeks ago, we were at $77. Couldn't go even higher. We dropped Today is going to be an interesting thing to see if buyers can pick this thing up. Because again, I don't think you can use the same excuses on PayPal as you did before, because the business is growing. Some business segments are growing very fast. Some are even reaccelerating. They are buying back shares. They are paying a dividend now for those that are interested in that. So really no reason to complain. Stock is very volatile right now because now we're back at up 7.3%. So maybe it is fine. It is finding some buyers at the moment. Garrett is strong for PayPal. Yeah, I know. It's training on a Saiyan planet where gravity is like a 50 times heavier than on Earth. SoFi, what is SoFi doing? SoFi right now is flat. People will say, "Oh, that also doesn't make much sense. Why is SoFi flat?" Again, I haven't listened to the earnings call. I did see some posts. They announced the SoFi smart card. Southwest is using Galileo. Again, with SoFi, I don't care right now why the stock is not up more on the day, because SoFi, contrary to PayPal, SoFi is growing very fast. SoFi is doing everything it should be doing. It's triple beating every single quarter. And SoFi, it's not like SoFi stock hasn't social finance. It's not like that one hasn't performed well for us, right? Hasn't performed well this year, right? So that's one thing. Maybe it was priced in, right? Maybe, who knows? But again, we were here at $31 for SoFi. Incredible. Let's see if 30 holds. But the results were great. I'll have a listen to the earnings call when I have time, and I'll touch on this hopefully later. But I'm not sure about that. Busy day here, very busy day. Then with PayPal, like I said, completely different, because PayPal sentiment around that has been horrible. Growth-wise, compared to a SoFi, of course, you cannot compare it. You cannot compare the two businesses because one is in the worldwide payment business, TPV $458 billion in just one quarter, trying to accelerate this huge business, which it is succeeding right now. But it is taking, as you said, for the branded part of it, it is taking a bit more time, but it is working. So with PayPal, it's in the camp of we still have to convince the whole market that we are not dead, that we are growing, we are actually accelerating. Where we have, the ads business, we had zero comments on that, but we are here in this agentic talk. We are here in the crypto stablecoin talk. We are growing with Venmo, with the younger generation. Buy now, pay later is seeing a huge movement as well. We are there. We are growing extremely rapidly. And so two different stories. I own both. I like both quite a lot. And I think both will do quite well. Quite well. SoFi has been doing very well for the majority of us. I think the majority of investors, actually, because it has not been higher than this. It has not been higher than the $31 and something we've seen the last couple of minutes. Roberto, I don't know what happened here, but no Florida Beach house for you now, because United Health is basically flat. United Health is basically flat right now. Shift 4 is down 1%. When is Shift 4 reporting? I think next week. Yeah, next Thursday. Okay, next week is also a very, very interesting week. Tomorrow we have Google. I don't think I'll be able to do a live because I won't be near a screen for the whole day. But I'll definitely cover it when I get back to the hotel. Iron is flat. It was down pre-market. Nebius yesterday was also up, I don't know, 6% or so. So Nebius back here at $126. AST back here at $80 after having a nice correction, I would say, from the top. Intel is at 40. Intel is at 40. Impressive, very impressive. And then PayPal right now back here at $76. It does seem like we have a lot more buyers trying to help it. I promise you, it's not me. I promise you, it's not me. But yeah, it still is a very good day. It still is a very good day for most of us that own PayPal and Sofi. Sofi, where is it now? Where did it go? Hello, social finance. Where are you? Here you are. It's still a very good day because both of them triple beats. Okay, that's the most important part. The business is doing better than what was expected. The stock will do what the stock will do. This is something that we've talked about with Sofi for a long time when Sofi was under $10 for a long, long time. But the business was doing well, which was the most important part. You say, yeah, but opportunity cost. No, to me, it was not opportunity cost. It was opportunity to buy more shares under $10, around $10, because we're at $30 right now. It's a 3x increase if you bought at 10. It's way more if you bought at 6 and 7, 8, 12 even, or 15. Insane. So most important part, remember, is to see that the business is doing what it should be doing. The business is continuing to grow. If management is confident in its future, then the stock will do what the stock will do. You have to take the opportunities to increase the amount of shares that you own at reasonable prices, of course, at reasonable prices. And yeah, PayPal has been a painful holding for sure, especially because it didn't make much sense, right? It was still very cheap, in my opinion, here at the start of the year at $90. And then it just became ridiculously cheap throughout the year, sorry. So PayPal today is, to me, and I think the data shows it, a better company than back in January. And so, yes, I wouldn't be surprised if it goes to $100. Can it go to $100 before the end of the year? It's a bit of a stretch, but I wouldn't be surprised. And even at 100, it's not expensive. Definitely not expensive when the business is becoming more profitable and growth is starting to accelerate, which is exactly what people wanted. So I didn't forget about the United Health one. I just don't have time to do everything right now. But let's see if we can find something. And then I'll have to start to move and get some breakfast. Long day. I'm going here to the Adobe Max event. So there is the keynote at 9 a.m. Then there is an investor meeting thing. I don't own any Adobe Adobe shares, but it's going to be an interesting couple of days with some interesting conversations that will come on the channel hopefully next week. What is my return on PayPal calls? I don't know, because the options usually take a while until I actually see what happens during the day. But United Health, I don't know. I'm not seeing much here right now. But I'll update you all when I have the time. But all in all, again, Sofi, excellent. By the way, I wanted to share this. Sofi in the one-stop shop. So Sofi integrated financial services model drove strong product adoption across the business. Cross-buy hit its highest level since 2022, with approximately 40% of new products opened by existing Sofi members. This is something that we've talked about with Emir as well. The fact that, yes, there are more and more products, but the adoption, you want to see more members adopt more products. So the cross-selling here becomes better and better. Profitability of the site, profitability business, profitability profile is becoming better. Say something about the local. What do you want to hear? What do you want to hear? Where is the local? Still at $15.40. What am I supposed to say about it? Not much other than the fact that it reports Wednesday, November 12th. I expect a good report. I expect Melly to have a good report as well. Sentiment, of course, around Melly, the local companies that are operating in Argentina have definitely seen, of course, a nice little bump after yesterday's election results in Argentina. So Melly here back at $2,290, and the local still around the same prices. It's quite interesting that we are a tiny bit lower than where we were the day after the earnings report 3 months ago, basically. 3 months ago. Where is it? Neil, it was just months ago when I asked if you thought Sofi would rouge. I mean, yeah. I mean, it's a couple of months. Yeah, okay, it's a few months because probably that was in April, when everything was down. Have I heard of Data Vault AI? The only reason I heard about it is because someone in the chat talked about it because it jumped so much, but I didn't really look at it. They're up 1,100% since early September. Oh, okay. Okay. I mean, whoever bought it before, congratulations. You think Amazon goes up? My bet is yes, and that's why I hold it, and that's why I did buy a little bit last week for the retirement portfolio, say with Melly. It's what I said in the previous videos. Yes, because I do think we're going to see some strength in AWS. If that's not the case, then no. If that's not the case, then no. SoFi, yeah, but SoFi, where is it? SoFi Red after a triple beat is not something new. I think we're used to it. I think we're used to it already. Triple beats for SoFi and the stock is red. We've seen that before. For example, here. We've seen that before. It drops, then it goes back up. Drops, then it goes back up. I am entertained. I'm not surprised. But again, we listened to the PayPal earnings report, earnings call. We didn't listen to the SoFi one. PayPal right now, crossing my fingers, touching every piece of wood available to me right now. It's up 9.6%. So we are seeing a lot more buying activity here, which is basically the price we've been at the start of October. NVIDIA, can NVIDIA make a run to $200 per share before they report at the end of November? Maybe that's going to be interesting. Let's have a look at a couple of other things here. No, not this CRM, I said. Salesforce 258. Sezzle, I believe, still 76, not moving much. This one, Dave has been going up. Dave is back at $250. I think Figma is still around the same price as of last year, 52 for Figma. What else did we look at? Adobe, I think, is still around. Same as Salesforce. So $361 right now. Melly, we've seen $2,290. My PayPal calls are finally moving. I assume they're moving. I assume they're moving quite a lot. Let's see. Uber $96. Meta $755. Meta, Google, Microsoft all reporting, of course, tomorrow, because they could not have chosen different days to report. Google still trying to make new all-time highs every single day here. Incredible. It's going to be quite interesting. Great companies, all-time highs going into an earnings report. Is it priced to perfection? Is it going to be good enough? Remains to be seen. You know what I'm expecting from Google tomorrow. Google Cloud, I think, will surprise a lot of people. A lot. CoreWeave, $137. Nebula still doing well. Robinhood still holding here, $146 per share. Palantir, again, making its way to $190. This one is reporting Monday, so upcoming Monday, we have Palantir's earnings report. AMD, $260. I do have actually an AMD video already scheduled. My expectations on it. Stock was a bit lower when I filmed this, but the same thing applies to it right now. Rubrik still holding here, hanging on around that 200-day moving average for a Rubrik. Will I be live more this week? Probably. Actually, yeah, maybe I can be live tomorrow morning as well. Because the market open is so early. So yeah, I could definitely do a little live stream tomorrow morning, because tomorrow my day starts a bit later, so I have time. I have time to do whatever I want after the stream. I have a question. Company is going for buybacks, PayPal. Will they try? No. I mean, you might say that's what they've been doing all these years. But I don't think the CEO enjoys seeing his stock not go up when the whole market goes up. Let's put it that way. So all in all, again, I have to go, but I do appreciate all of you joining me this nice morning. And thank you for. I do think that you already became a member once, so thank you for rejoining. If you are rejoining, or just thank you for joining. But I do appreciate you all joining this very early live stream. There will be a video. I will definitely do a recap video on PayPal's earnings and Sofi earnings. I just don't know when. Because now it's almost 7 a.m. here in LA. But beautiful weather. I don't know if it's like this the whole year, but not bad at all. But I will be very busy the whole day today. Tomorrow morning there will be a live stream. Now that I think about it, I do have time, and yeah, there is an AMD video planned for later today already. So that should keep you busy. Thursday is probably also a live stream in the morning, and then we're back to regular schedule. The weekend and then the days after that. So yeah, I might miss the Google thing tomorrow, because they report after the close, which is 4 p.m. Eastern, which is 1 p.m. here in LA, which is in the middle of the day. I won't be near a PC, but I do promise that I do have something interesting to share, especially for those that are interested in Adobe, and hopefully this will open some doors for future opportunities to bring more people on the channel. But we'll see. So right now, there will be a video about PayPal and Sofi. Whenever that will happen remains to be seen. But tomorrow morning we're back early for a morning stream. Same for Thursday, and then we're back with the regular schedule. So thank you all for joining. I've been saying this for the last 5 minutes, but I really appreciate it. We had like over 1,000, we still have over 1,000 viewers apparently. So really appreciate it, really, really. And yeah, hopefully we'll see each other again pretty soon. Have a wonderful rest of your day or start of your day for us West Coast folks who really deserve a lot of praise for waking up super early to watch to watch the market open. So yeah, thank you for joining, and we'll see each other in the next one. Don't panic because SoFi doesn't react the way you think it would. Maybe it will take a day or two, and then we'll see it recover. We've seen that happen. We've seen that happen before. So relax and